Welcome to a Dual Digest podcast where two friends dive deep into the topics that matter.
From technology and AI to science, history, and global trends, we break down complex ideas and make them easy to understand.
Whether you're here for insights, entertainment, or just some good conversation, we've got you covered.
Just remember, stay curious, question everything, and keep exploring the world around you. And remember, every great conversation starts with a curious mind. Let's explore together.
Make sure to follow and subscribe.
Hey everyone, welcome to another deep dive. You know how much we love getting into the nitty-gritty of complex topics. And today we're diving headfirst into the world of blockchain and Bitcoin.
It's definitely a hot topic right now. Everyone's talking about it.
For sure, but it could be pretty confusing trying to figure out what it all means. So we've gathered some awesome sources for this deep dive, a couple of YouTube videos that break things down, and some recent news articles that explore how this tech is playing out in the real world. You ready to get into it?
Absolutely. Let's dive in.
So let's start with the basics. What exactly is blockchain? I mean, I hear people throwing around terms like digital ledger and decentralized network, but I'm not always sure what they actually mean.
Yeah, it can definitely sound intimidating at first, but at its core, blockchain is actually a pretty simple concept. Imagine a giant digital spreadsheet that keeps track of every single transaction.
Okay, I'm picturing a massive Excel sheet, but how does that differ from a regular database?
That's where the decentralized part comes in. Instead of being stored on one central server, this spreadsheet is distributed across a whole network of computers.
So there's no single point of failure. If one computer goes down, the whole system doesn't crash.
Exactly. And every time a new transaction happens, it's added to a block, which is then linked to the previous block, creating a chain, hence the name blockchain.
Okay, so it's like a chain of digital records, and because it's spread out across so many computers, it's super secure and transparent.
Right. Once a block is added to the chain, it's virtually impossible to tamper with it. This makes blockchain incredibly trustworthy, and that's what has people so excited about its potential.
I can see why. So where does Bitcoin fit into all of this? I know it's a cryptocurrency, but how does it actually work?
Bitcoin was the first and still most famous application of blockchain technology. It's like the email of the blockchain world, the first real-world use case that proved the concept.
So if blockchain is the internet, Bitcoin is like email.
Precisely, Bitcoin uses the blockchain to create a decentralized digital currency. That means there's no central bank or government controlling it.
So it's like a peer-to-peer system. People can send and receive Bitcoin directly without any intermediaries.
Exactly. And because it's based on the blockchain, all those transactions are recorded publicly and permanently.
That brings up a whole bunch of questions like, how is Bitcoin created and what gives it value? We'll have to get into that later. But first, I'm curious about this idea of a world without banks. I mean, is that even possible?
It's a radical idea that's gaining traction, especially after the 2008 financial crisis, which really shook people's faith in traditional banking.
Yeah, those were some crazy times. It felt like the whole system was about to collapse.
Exactly. Bitcoin emerged in the wake of that crisis almost as a direct response to the problems of centralized finance.
So Bitcoin is offering an alternative, a decentralized system where people have more control over their own money.
That's the vision. But it's not without its critics. Some argue that Bitcoin is too volatile and risky to be a viable currency.
And what about the powers that be, like central banks and governments? Are they on board with this whole decentralized finance thing?
Not exactly. The European Central Bank, for example, has expressed concerns about Bitcoin and other cryptocurrencies. They argue that it could destabilize the financial system, and they're working on their own digital euro, which would be centrally controlled.
So it's like a clash of ideologies, the old guard versus the disruptors.
You could say that it's a fundamental shift in how we think about money and finance.
And it's all playing out in real time, with countries like El Salvador adopting Bitcoin as legal tender.
El Salvador is a fascinating case study. They're the first country to make Bitcoin a national currency, and it's been a bumpy ride so far. But it's definitely a bold experiment that's worth watching.
This whole thing is mind-blowing. But let's back up a bit and talk about the mysterious creator of Bitcoin, Satoshi Nakamoto. Who is this person, and why all the secrecy?
That's one of the biggest mysteries in the tech world. No one knows for sure who Satoshi Nakamoto is, or if it's even a single person.
It's like something out of a spy novel. They released this revolutionary technology and then vanished into thin air.
It adds to the mystique of Bitcoin, and it also speaks to the decentralized nature of the project. It doesn't matter who created it. The code is open source, the network is self-governing, and the technology continues to evolve.
This is all incredibly interesting, but I have to admit I'm still a bit fuzzy on how Bitcoin actually works. Like, how are new Bitcoins created? And what gives them value?
That's where the concept of mining comes in. It's the process by which new Bitcoins are created and transactions are verified.
Okay, so let's break that down. What exactly is mining? And who are these miners?
Imagine a giant network of computers all competing to solve complex mathematical puzzles. These computers are run by miners, and the first one to solve the puzzle gets to add a new block of transactions to the blockchain.
And they get rewarded for their efforts with new Bitcoins.
Exactly. That's how new Bitcoins are created, and the more computing power a miner has, the better their chances of winning the reward.
So it's like a digital gold rush. People are investing in powerful computers to mine for Bitcoin.
It's a competitive and energy-intensive process, but it's essential to how Bitcoin functions. And because there's a limited supply of Bitcoin, only 21 million will ever exist, this scarcity contributes to its value.
So it's like a deflationary currency, the opposite of what we're used to with traditional fiat currencies.
That's one of the key differences, and it's a point of contention. Some see it as a hedge against inflation, while others worry about its deflationary pressures.
A lot to think about. It seems like there are as many questions as there are answers when it comes to Bitcoin. And to think we've only just scratched the surface.
We've got a lot more ground to cover, but that's the beauty of a deep dive. We're just getting started.
Okay, so we've talked a lot about Bitcoin, but I know there's a whole universe of cryptocurrencies out there. What else should we be paying attention to?
Yeah, Bitcoin might have been the first, but it definitely didn't stop there. The crypto world is constantly evolving, and there are tons of other interesting projects popping up all the time.
Like I've heard of Ethereum and Dogecoin, and honestly, I can't even keep track of them all.
Haha, yeah, it can be a bit overwhelming, but that's part of what makes it so exciting. Let's start with Ethereum, which is probably the second biggest name in the crypto space after Bitcoin.
Okay, so what's the deal with Ethereum? Is it just another digital currency?
Well, it is a cryptocurrency, but it's also much more than that. Think of Ethereum as a platform, a decentralized operating system that allows developers to build all sorts of applications on top of it.
Oh, interesting. So it's like the App Store, but for blockchain.
Exactly. We call these applications decentralized applications, or dApps for short.
dApps. Okay, I'm starting to get the lingo. So what kind of things can you build with these dApps?
Oh, all sorts of things. One of the most popular use cases is decentralized finance, or DeFi.
DeFi, I've heard that term thrown around a lot, but what does it actually mean?
Basically, DeFi aims to recreate traditional financial services like lending, borrowing, and trading, but without the need for banks or other intermediaries.
Whoa. So you're saying we could potentially have a whole financial system that's run on the blockchain?
That's the idea. It's still early days, but DeFi has the potential to revolutionize the way we think about money and finance.
That's pretty mind-blowing, but it also sounds a bit risky. I mean, what happens if something goes wrong?
Well, there are definitely risks involved with DeFi. One of the biggest concerns is security. Because these platforms are built on code, they're always vulnerable to hacks and exploits.
So it's like the Wild West out there. You have to be extra careful where you put your money.
Exactly. It's important to do your research and choose DeFi platforms that have a good track record and strong security measures.
Okay, good advice. So besides DeFi, what other kinds of dApps are being built on Ethereum?
Oh, there's a huge variety, everything from decentralized marketplaces and social media platforms to games and collectibles.
Wow. So the possibilities are really endless.
That's what's so exciting about this space. It's like the early days of the internet where no one really knew what it would become.
I love that analogy. It feels like we're witnessing the birth of a whole new technological revolution.
I think so too. And it's not just about the technology itself. It's about the potential to create a more open, transparent, and equitable world.
That's a powerful thought. So we've got Bitcoin, Ethereum, DeFi dApps. What else is out there in the crypto zoo?
Well, we've got stablecoins, which are designed to address the volatility of cryptocurrencies like Bitcoin. They're pegged to real-world assets like the US dollar or gold, so their value is more stable.
Oh, that makes sense. So it's like having the best of both worlds, the benefits of blockchain technology without the wild price swings.
Exactly. Stablecoins are becoming increasingly popular, especially for things like everyday transactions and remittances.
I can see why. But even with stablecoins, isn't there still a risk of centralization? I mean, someone has to control the peg, right?
That's a good point. The level of decentralization can vary depending on the stablecoin. Some are backed by centralized entities, while others are algorithmically stabilized.
Okay, so it's important to understand the underlying mechanisms before diving into stablecoins. Anything else we should be aware of?
We've also got utility tokens, which give you access to specific services or products within a blockchain ecosystem. For instance, you might need a certain token to use a decentralized storage platform or participate in a blockchain-based game.
Sounds like a membership card or a key that unlocks certain features.
Exactly. And then there are security tokens, which are essentially digital shares in a company or asset. They represent ownership and can be traded on blockchain platforms.
Oh, so it's like investing in the stock market, but with crypto.
You could say say that, but security tokens are still a relatively new concept, and the regulatory landscape is still evolving.
Okay, so maybe we should hold off on those for now. Anything else?
Oh, and of course we can't forget about the meme coins like Dogecoin and Shiba Inu.
Wait, those are actual cryptocurrencies, the ones that started as jokes?
They might have started as jokes, but they've gained a massive following, and their market caps are nothing to sneeze at.
It's like the internet's influence on the financial world, memes becoming assets. It's crazy.
Yeah, it's definitely a sign of the times, but it also shows how unpredictable the crypto market can be.
So we've got Bitcoin, Ethereum, stablecoins, utility tokens, security tokens, and meme coins. Is there anything else? I feel like I need a spreadsheet just to keep track of it all.
Haha, there are countless other projects and tokens out there, each with its own unique features and goals. But the key takeaway is that it's crucial to do your research before investing in anything.
So no blindly jumping on the bandwagon just because something is trending on Twitter.
Exactly. Understand the technology, the team behind the project, and the potential risks involved. It's about making informed decisions based on your own financial goals and risk tolerance.
Sounds like solid advice. But speaking of risk, how do we even keep our crypto safe? It's all digital, so isn't it vulnerable to hackers and scammers? Okay, so I get it. We need to be careful. But how do we actually protect our crypto? I mean, it's all digital. So isn't it super vulnerable to hackers and scammers?
Absolutely. Security is paramount when it comes to crypto. That's why we have crypto wallets.
Crypto wall is like a digital piggy bank for my Bitcoin.
You got it. They're essentially digital vaults that store your crypto assets.
Okay, but can't I just leave my crypto on the exchange? Isn't that easier?
Well, some exchanges do offer wallets, but it's generally not recommended to store large amounts of crypto there.
Why not? Aren't exchanges supposed to be secure?
They are, but exchanges are also prime targets for hackers. They hold vast amounts of cryptocurrency, so there's always a risk that they could be compromised.
So it's like leaving all your cash in a bank vault. It's safer to keep some of it at home in a safe.
Exactly. That's why it's best to transfer your crypto to a personal wallet where you control the keys.
Okay, that makes sense. So what kind of wallets are out there?
There are two main types, hot wallets and cold wallets.
Hot and cold. It's like ordering coffee.
Kind of. Hot wallets are connected to the internet, so they're more convenient for frequent transactions, but they're also more vulnerable to hacking.
Makes sense. So it's like using a mobile payment app on your phone. It's quick and easy, but there's always a risk.
Exactly. Cold wallets, on the other hand, are offline devices. They're like physical safes for your crypto.
So it's like keeping your gold bars in a vault buried underground.
Precisely. Cold wallets offer the highest level of security, but they're not as convenient for everyday use.
Got it. So it's all about finding the right balance between security and convenience. But you keep mentioning these keys. What are those exactly?
Your private keys are like the master passwords to your crypto assets. They prove ownership and allow you to access your funds.
Okay, so if I lose my private keys, I lose my crypto.
Basically, that's why it's crucial to keep them safe and secure.
This is a lot of responsibility. I'm starting to feel the weight of this digital frontier on my shoulders.
It's definitely a learning curve, but that's what makes it so exciting. We're all figuring this out together.
So as we wrap up this deep dive into the world of blockchain and Bitcoin, what are some key takeaways our listeners should keep in mind?
First, do your research. Don't just jump into anything without understanding the risks and potential rewards.
Second, choose a crypto wallet that suits your needs and prioritize security above all else.
And finally, remember that this is still an evolving space. There will be ups and downs, challenges and opportunities, but it's a journey worth taking.
Couldn't have said it better myself. Thanks for joining us on this incredible deep dive into the future of money and technology.
It's been a pleasure. Until next time, keep exploring and keep diving deep.
Make sure to follow and subscribe.